Okay, so as you can tell from the title of this video, there are 10 million Americans facing a housing crisis. What you cannot tell from the title is I believe that number's low. I truly believe there is more than 10 million. This is based off of the HUD user guide, which is a survey. And normally I have found that it's very conservative, like I said. I would say be opposed to say it's more than double this. So let's just go ahead and jump right into it. Okay, so I'll go over the renters and then the homeowners. So let's go ahead and tackle the renters first. According to the survey, the number of renters that are behind has increased from 11% or 5.1 million in May to 13.1% or 6 million in June. Now it is always, if there's a lag, it's about a month behind. And like I said, this is a survey. I really feel those numbers could be higher, but we'll just go ahead and base it off what the HUD user report is reporting. Okay, what also the report goes on to say there are 2.2 million tenants who could possibly be facing evictions within the next 2 months. So this is where I also think the numbers are a little off, because if there's 6 million behind, wouldn't that number be a little closer to 6 million potentially facing evictions? That's just my 2 cents. So what are the investors that own these properties doing? What are the landlords doing? Are they able to keep up with this? I used to have a property management company where I managed a couple hundred rentals for primarily single family owners, meaning not so much investors. It was rare I would get an investor. I think I maybe had 2, and I had that company for over 7 years. So I felt investors were rare. It was primarily people owning 1 or maybe 2 properties. I guess if they own 2, you can consider them an investor. But a bulk of them was people that had bought a property, maybe bought it wrong, so they still owed too much to try and sell it, and they had to move for whatever reason, so they would go ahead and rent it out. And it was very stressful. You're not ever wanting to get into becoming a landlord. You gotta have some thick skin. So like I said, so the bulk of my rentals were single family, were one owner owned. They weren't necessarily investors. It was just a way to keep them from going into foreclosure or, losing too much on the property. And then when the values come up, then they would normally let me sell it or something like that. But I was constantly acquiring owners that way. So for one of them to get a hit of an eviction could sometimes really put them behind. We were very careful about that. Thank goodness when I owned it, all this craziness wasn't going on. So again, my thought is these landlords, especially and investors, what's happening with them? How are they handling this? Through my research, I am seeing a lot of even investors starting to foreclose on their properties. It's this big domino snowball effect happening. Okay, so let's talk about homeowners now. The number of homeowners behind on their mortgages has slightly decreased 5.3% or 4.3 million in May to 5.1% or 4.26 million in June. But overall, the thing is, these numbers have not changed much from COVID. They have been staying in the between 4 to 5 million. There's been, since COVID, 4 to 5 million homes potentially facing foreclosure. And let me tell you, from research and talking to others, there has been plenty of people who have not made a mortgage payment since COVID. There's not been a mortgage payment made in the last 4 years. So 1.2% or 1.01 million homeowners fear foreclosure in the next 2 months. Again, this is where those numbers really kind of don't make sense, because if 4 million people are behind, wouldn't that number be closer to 4 million? I don't know. What are your thoughts? What do you think? Now, here's my prediction. I'm predicting the number of foreclosures and evictions will increase after the election due to a potential economic downturn. And banks will start to crumble with all these foreclosures. What do you think? Please comment below. I would love to hear your thoughts. Now, I'm pretty sure many people are waiting till we get through the election to go ahead and buy. But if you're not, negotiate, negotiate, negotiate. Now's the time to get a great deal. There are homes that have been on the market for over a year. They're starting to all come down in prices. It's almost like a race to the bottom. Everybody is feeling the pinch, the pain. And remember, there's always people that have to sell. So even if you negotiate a fantastic deal, it's still a win-win. They have to get out. I get people all the time. They're telling me I will practically take just about anything. As long as they can avoid, a short sale or foreclosure, they're trying to get out now because they see what's coming. They see the storm coming. Now, if you want to wait till after the election and buy, if you're thinking of buying either an investment property or your first home or just moving, whatever, now's the time to save up and get that credit in shape and be ready to hit the ground running. Because I'm going to tell you, there's a whirlwind of great opportunities coming. There's going to be tons of auction, the foreclosures, short sales, and people just desperate to sell. So just get ready. But I'd like to ask you a question. How much do you think the rates are going to be cut by election time and just right before the holidays? I'd love to know this. What are your predictions with all this? Okay, so now go ahead, combine the two, and you get at least 10 million people not paying for their housing in June. And remember, that number could be really, really low. But let's just go with the 10 million. And also, notice how they're not reporting this on the news. They're reporting the job losses and all that. And as a matter of fact, I have links to all this, including where I get my job loss reports. I'll go ahead and put them all below the video. Let me know if you find that helpful. Okay, so now moving on to the financial part of the video that I mentioned in the title. Banks are going to start to crumble with all the foreclosures. Do you agree? Okay. And remember, your money is only insured up to $250,000. And I know a lot of you watching have a lot of money, millions, maybe even some billionaires. Is it safe to keep it in the banks? There is $7.1 trillion of uninsured money in the banks right now. So if you're keeping more than $250,000 in the bank with a potential economic collapse, you're taking one big gamble, my friend. And I'm even hearing some reports that say the FDIC doesn't even have enough to cover the first $250,000. But at the bare minimum, heed my warning. I'm not a financial advisor, as you all know, or you should know, or I'm disclosing now by any means. But if you have $250,020 in the bank, go ahead and move that $20. Be like, I want my $20 and get it out of there. If you have anything over $250,000, get it out. It's not going to be insured. Put it between your mattress. I don't care. It's just, I am not comfortable keeping any more than that per account in the banks. There's some banks, maybe you can even do 253 times, as long as they're separate accounts. You need to do you need to look into that. But my advice is anything over 250, get it out of the bank, put it into another bank, put it in a shoebox under your bed, just get it out of there because it's not insured. So let me go ahead and read this article. And again, I'll post this below the video too. Americans are holding a whopping $7.1 trillion of uninsured cash in their bank accounts, according to an under-the-radar report from the Federal Deposit Insurance Corporation, the FDIC. The agency says the data, which is captured at the end of March, shows the amount of unprotected cash in U.S. banks is increasing for the first time since the fourth quarter of 2021. U.S. banks align with the FDIC to promise customers that deposits up to the amount of $250,000 will always be covered in the event of a collapse. But anything in excess is not insured. The FDIC is increasing its scrutiny on the issue, warning that uninsured deposits may make lenders more susceptible to bank runs. Again, I'll post the article below. And bank runs before, years ago, literally meant running to the bank. Now, it's you hop on your phone, you hop on your laptop, and you go ahead, transfer that money, click, 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 done. Times have changed, my friends. Okay, let me continue. While many banks have increased their resilience on uninsured deposits, the trend has been most pronounced among the largest banks. The FDIC's $250,000 cap was tested during last year's collapse of Silicon Valley Bank, Signature Bank, and First Republic Bank. You know, as soon as everyone heard of the first bank collapse of Silicon Valley, people were like, give me my $10. And there was others that were like, it's fine, it's fine. So let me tell you, once the banks start collapsing and the rumors start spreading, maybe I need to move my money. Okay, so listen, we had 3 banks collapse. There's going to be more. Look, 10 million plus people are not paying their bills. And wait till 2025, top it off, because VAs are expiring from the COVID moratorium end of this year. So what do you think that means January? There's going to be a lot of them coming on the market too. At auctions, foreclosures, short sales. Okay, sorry, I get a little sidetracked here. So getting back to the article, in a historic first, all deposits at the banks were protected by the federal government with a combination of FDIC's insurance and an extraordinary use of the systemic risk exception, giving the FDIC, Federal Reserve, and Treasury Department the power to backstop everything. In the wake of the crisis, the FDIC says it's now asking U.S. banks to provide comprehensive data on the composition of both insured and uninsured deposits to improve its ability to track and manage risk. Why do you think they're doing that? Me, my opinion, they're waiting to see how much these banks report because they know the beep is about to hit the fan. I'm going to say it again. If you have more than $250,000 in the bank, get it out, transfer it, put it somewhere. Here's your warning, do it before the election. That's my advice. Let me know in the comments if you think there's something else we can all do to prepare. Thanks for watching. See you on the next one.